Welcome back to Iron Digital. It's your boy D Wills here at your service. Before we begin, please support the channel by subscribing and liking the video. In today's video, we're going to be going over whether Bitcoin will actually get down to $24,000 or not. Alright, let's dig into this article a little bit. Rich Dad Poor Dad's Robert Kiyosaki warns of biggest crash in world history. Expects $24,000 Bitcoin price. Alright. Famous author and investor Robert Kiyosaki has predicted that the biggest crash in the history of the world is on the way. Rich Dad Poor Dad is a 97-book co-authored by Kiyosaki and Sharon Lecher. It has been on the New York Times bestseller list for over 6 years. Over 32 million copies of the book have been sold in over 51 languages across more than 109 countries. Kiyosaki tweeted Friday, biggest bubble in world history, getting bigger, biggest crash in world history coming. Buying more gold and silver, waiting for Bitcoin to drop to 24K. Crashes, best time to get rich. However, Kiyosaki did not elaborate on how he came up with his Bitcoin price prediction. When the price of Bitcoin began falling substantially in May, the Rich Dad Poor Dad author urged people to buy the dip. I hear I can't afford Bitcoin. Bitcoin is crashing. Good news. Now is your chance. Get educated. Buy coins that outperform Bitcoin for pennies. Stop whining and take action, he advised at the time. When the Bitcoin price fell to the 37K level on May 30th, Kiyosaki tweeted Bitcoin crashing. Great news. When price hits 27K, I might start buying again. A lot will depend upon global macroeconomics or environment, He emphasized, remember, the problem is not gold, silver, or Bitcoin. Problems are the incompetence in government, Fed, and Wall Street. Well, I definitely agree with him there. Okay. Robert Kiyosaki, I generally like the guy. The Rich Dad Poor Dad book, I've read it. I've read it a couple times, actually. I think the book is really good for expanding your being able to understand about assets and liabilities and understanding wealth generation and all that kind of stuff. I think this is really good for that. I think the story was a bit fabricated. I think it was made up because it's supposed to be his poor dad is his biological dad, his rich dad is his friend's dad, and they just have two different perspectives. But I think the story was made up. That's what I think. But yeah, I mean, he's a solid guy to follow for the most part. Believes in sound, hard money. So he will not stir you wrong. I'll say that. Now, as far as whether Bitcoin will hit 24K or not, let's take a look at the charts real quick. Now, I usually tend not to look at just the Bitcoin chart. I like to look at the whole overall market, but I'll look at the Bitcoin chart this time. As you can see, Bitcoin is somewhere around $33,776. When I look at this, I guess I can see that there's demand around this area, and there's also potential demand around, the 24K. That does sound right, and also around the $20,000 mark as well. So, yeah, I mean the market. Let's see. Let's put a couple lines on the chart. Okay, we got this one. Okay. Yeah, so there's three different levels that I'm seeing the market possibly getting to. It could possibly get to 28,000, 24,000, which is what Kiyosaki predicted, or it could even come down to the $20,000 mark. So that is a real thing. It could definitely get down there. It's not guaranteed. It doesn't mean the market will definitely get there, but it is possible for the market to get all the way down to 20,000, because that's where I see demand at, the last bit of demand around that area. I don't really see it going lower than 20,000, but I mean, it is what it is, I guess. So 28,000, 24,000, $20,000. All right, now why is a lot of this stuff happening right now? Well, what's happening right now, I'll look into my other charts. If you can notice that there's red pretty much all over the place. There's red in equities, there's red global markets, commodities, everywhere. There's the markets are down in general everywhere. Even gold is down. It's 1764. I mean, you would think that gold would be soaring right now. But what's happening is that there's a lot of uncertainty in the market right now. And a lot of that uncertainty is because of the Fed. The Fed doesn't know what it wants to do for the most part, or at least it's not giving the public any kind of they're not giving the public any kind of feedback as to what they would like to do. Is kind of wishy-washy back and forth. And the markets do not like uncertainty. They hate that. So, we have the inflation thing that's been going on for some time now, right? We know that 30% of the dollars that are in circulation right now was printed last year. And we've still printed a whole lot this year. That's not even counting what's been printed this year. So there's a massive amount of money printing going on right now. And the Fed is like, okay, well, we need to possibly raise interest rates so that we can kind of balance this out. So the way this thing works is when inflation comes into the system, the Fed will generally try to raise interest rates as well to kind of balance it out so that it doesn't cause hyperinflation. Interest rates goes up, that means obviously you have to spend more. You're paying more to borrow money. That's what that is. So it'd be no different than if you had a 30% APR on a credit card or you had a 0% APR on a credit card. Obviously, you would spend money on a 0% APR credit card because you wouldn't have to pay anything extra for the money that you're borrowing. So to try to balance it out and keep people or discourage people from borrowing, they'll try to raise interest rates and they'll try to incentivize people who want to save their money. So they'll basically try to contract the economy in a sense. It's not really contracting as much because it is somewhat balancing itself out. But, it's one of those things that usually happens. Now, what happened with last year, inflation went up and interest rates was down. And so now you got interest rates that's like darn near close to zero and you have inflation going up. Well, that causes hyperinflation because there's nothing to not incentivize people from borrowing. I mean, I can borrow as much money as I want. Not have to pay any money on the debt except for what I owe. Plus, there's still inflation coming in, like crazy from the additional money printing. So yeah, it puts more and more pressure on the inflation or the devaluation of currency rather. And so a lot of that is the reason why the markets are going through right now. And as long as the Fed is going to be in this like wishy-washy position where nobody knows what's going on, you're going to see the markets continue to do this. You'll see days where Bitcoin goes up, it may go up a good amount or it may go down. And this will be across the board until we know exactly for sure what's going to happen. And we just pretty much have to let time run its course. Because no matter what, even with all this going on, in the short term, anything could happen. Anything could happen in the short term, but best believe long term, interest rates will continue to go down and even to negative. Inflation will continue to go up. What we did last year, we pretty much sealed the deal for the U.S. I mean, the U.S. is done at this point. it really is. We didn't respond fast enough to what was going on, and we shut our economy down. We just shut it down completely. Our economy is already fragile as it is. So for you to shut your economy down for that long is a drastic thing to do. And we're going to be paying for this for some time. The markets usually lag when it comes to this kind of stuff. So when you're seeing a lot of printing going on last year, you didn't really see the effects drastically at the time because there's a time lag for when inflation comes in. But you're starting to see the effects now. You can go to the store and you can see the prices of goods going up. You can see real estate rising 15-20% in value, or just price adjusting rather to the inflation that's coming in. So it's a real thing. But like I said, in the short term, these markets, it may go anywhere. Bitcoin could come down to, like I said again, it could come down to 28, $24 or even $20,000. Whatever it happens to do, I don't see it being a long-term thing. I see it only being something in the short term. Long term, Bitcoin will go up, and the markets will start to come back around again as well. So, just try not to get too emotional about it. If you're investing, then that means that you're investing for long term. If you're trading, then obviously it doesn't really matter to you. But stay encouraged. The games are not going to last forever. We will eventually get through this. Bitcoin is poised to go to astronomical numbers, as well as this technology. So stay encouraged and, keep hodling. Well, that is it for today's news. I hope you enjoyed it. As always, please subscribe to the channel, like the video, take a look at some of the other content, and I will be talking to you guys very soon. Take it easy. Peace.